Welcome back to Stocks and Trades channel. We provide easy to digest information in short videos about stock market investing, personal finance, money saving, and building wealth. Our content is designed to help you achieve financial freedom sooner. Today's video will provide news, insight, and investment suggestions on the week ahead. We'll analyze 2+1 stocks to watch this week and some others that will be volatile. So, let's begin. Disclaimer. All trading involves risk. Only risk capital you are prepared to lose. Past performance is not an indication of future results. This content is for educational or entertainment purposes only and is not investment advice. The S&P 500 fell nearly 3%, declining for the fourth week out of the past 5 and extending the stock market's rough start for the year. The war in Ukraine continued to drive markets, and a rally on Wednesday wasn't enough to offset negative daily results the rest of the week, including a steep decline on Monday. The Nasdaq dropped 3.6% on Monday, putting the technology-oriented index into bear market territory, as it fell more than 20% below a recent high set in November. The Dow fell 2.4% for the day, leaving that index in a correction, or more than 10% below a recent high in January. After closing around $115 per barrel the previous week, the price of U.S. crude oil surged as high as $130 early in the week as the United States announced a ban on Russian oil imports and Russia continued its invasion of Ukraine. The price subsequently fell to around $109 on Friday, still unusually high, given that oil traded as low as $66 less than 4 months ago. Our first stock type is dividend earning stocks. These are a great way to earn passive income. This week's suggestion is Manulife, with ticker symbol MFC. Manulife Financial Corporation, together with its subsidiaries, provides financial products and services in Asia, Canada, the United States, and internationally. The company operates through wealth and asset management businesses, insurance and annuity products, and corporate and other segments. The wealth and asset management businesses segment provides mutual funds and exchange-traded funds, group retirement and savings products, and institutional asset management services through agents and brokers affiliated with the company, securities brokerage firms, and financial advisors, pension plan consultants, and banks. The insurance and annuity products segment offers deposit and credit products, individual life, and individual and group long-term care insurance, and guaranteed and partially guaranteed annuity products through insurance agents, brokers, banks, financial planners, and direct marketing. The corporate and other segment is involved in property and casualty insurance and reinsurance businesses, and runoff reinsurance operations, including variable annuities, and accident and health. It also manages timberland and agricultural portfolios, and engages in insurance agency, portfolio and mutual fund management, mutual fund dealer, life, annuity, long-term care, and financial reinsurance, and fund management businesses. Additionally, the company holds and provides investment management, counseling, advisory, and dealer services. The company was founded in 1887 and is headquartered in Toronto, Ontario. Roy Gori has been President and Chief Executive Officer of Manulife since June 2017. Some technical analysis data shows that Manulife's return on equity is 12.6%, its average volume is about 4 million. Its market cap is $38.52 billion, its beta is 1.2, its PE ratio is 7.13, its PEG ratio is 1.84 and its EPS is $2.78. Our rating is 10 and we consider this stock as a moderate buy. Based on experienced analysts offering 12-month price targets for Manulife in the last 3 months, the average price target is $24.13, with a high estimate of $28.99 and a low estimate of $19.98. With current price at $19.83, this would mean almost 21.68% average profit over the next year. Manulife pays an annual dividend of 82 cents, which amounts to a dividend yield of 4.14% and a dividend growth of 21.03%. The ex-dividend date forecast is the 16th of May, so buying a Manulife stock by then will pay you 26 cents on 20th June. The above analysis is not exhaustive and just presents you some important insights. We suggest using this analysis and carry out your own detailed research before taking a decision to open any position. Our second stock type is growth stocks. A growth stock is a share in a business that's shown above average earnings and has the potential to grow faster than the overall economy. This week's suggestion is Splunk, with ticker symbol SPLK. Splunk Incorporated provides software and cloud solutions that deliver and operationalize insights from the data generated by digital systems in the United States and internationally. The company offers Splunk Platform, a real-time data platform comprising collection, streaming, indexing, search, reporting, analysis, machine learning, alerting, monitoring, and data management capabilities. It also provides Splunk solutions, such as Splunk Security Solutions that enable cybersecurity teams streamline the security operations workflow, accelerate threat detection and response, enhance threat visibility, and scale resources to increase analyst productivity through machine learning and runbook-driven automation. Splunk IT Solutions that provide IT operations teams visibility and control across cloud and on-premises environments, and Splunk Observability Solutions for building and maintaining infrastructure and applications. In addition, the company offers ecosystem solutions, which includes pre-built data inputs, workflows, searches, reports, alerts, custom dashboards, flexible UI components, custom data visualizations, and integration actions and methods, as well as Splunk On-Call, Splunk Infrastructure Monitoring, and Splunk Phantom Solutions, which provides APIs, SDKs, and other interfaces that enable its ecosystem, including third-party developers, partners, and customers to build content that configures and extends Splunk solutions to accommodate specific use cases. Further, the company provides adoption and implementation services, education services, and maintenance and customer support services. It sells its offerings directly through field and inside sales, and indirectly through various routes to market with various partners. The company was founded in 2003 and is headquartered in San Francisco, California. Graham Smith has served as chair since 2019 and interim chief executive officer of Splunk since November 2021. Some technical analysis data shows that Splunk's return on equity is -128.9%, its average volume is about 2.6 million, its market cap is $19.4 billion, its beta is 1.22. Its PE ratio is -14.8 and its EPS is -$8.29. Our rating is 8 and we consider this stock as a moderate buy. Based on experienced analysts offering 12-month price targets for Splunk in the last 3 months, the average price target is $156.37, with a high estimate of $232 and a low estimate of $130. With current price at $122.17, this would mean about 28% average profit over the next year. Splunk is in the midst of a transition in its business. It's focusing on offering its services in the cloud, making them far more accessible, and it's driving a surge in revenue. In the company's fiscal year 2022 that just ended, cloud-based sales grew by 70%, compared to overall sales which grew 19%. Splunk's cloud revenue of $943 million also expanded to become 35% of the total $2.67 billion revenue base, compared to just 24% in the prior year. Splunk is also attracting more large customers. In fiscal 2022, it had 675 clients spending $1 million or more annually, up 32% compared to fiscal 2021. A new chief executive officer who brings experience in software as a service revenue models has also joined the company, which will help Splunk transition into its next phase of growth. The above analysis is not exhaustive and just presents you some important insights. We suggest using this analysis and carry out your own detailed research before taking a decision to open any position. Our third stock type is blue chip stocks. These are typically large, well-established and financially sound companies that have operated for many years and that have dependable earnings, often paying dividends to investors. This week's suggestion is General Motors, with ticker symbol GM. General Motors Company designs, builds, and sells trucks, crossovers, cars, and automobile parts and accessories in North America, the Asia Pacific, the Middle East, Africa, South America, the United States, and China. The company operates through GM North America, GM International, Cruise, and GM Financial segments. It markets its vehicles primarily under the Buick, Cadillac, Chevrolet, GMC, Holden, Baojun, and Wuling brand names. The company also sells trucks, crossovers, cars, and purpose-built vehicles to dealers for consumer retail sales, as well as to fleet customers, including daily rental car companies, commercial fleet customers, leasing companies, and governments. In addition, it offers safety and security services for retail and fleet customers, including automatic crash response, emergency services, roadside assistance, crisis assist, stolen vehicle assistance, and turn-by-turn navigation, and connected services comprising mobile applications for owners to remotely control their vehicles and electric vehicle owners to locate charging stations, on-demand vehicle diagnostics, smart driver, marketplace in-vehicle commerce, in-vehicle voice, voice assistant, navigation and app ecosystem, connected navigation, Sirius XM with 360 liters, and 4G LTE wireless connectivity, as well as develops and commercializes autonomous vehicle technology. Further, the company provides automotive financing and insurance services, and software-enabled services and subscriptions. The company was founded in 1908 and is headquartered in Detroit, Michigan. Mary Barra has been serving as General Motors Chief Executive Officer since January 2014. Some technical analysis data shows that General Motors' return on equity is 18.4%, its average volume is about 20.53 million, its market cap is $60.31 billion, its beta is 1.23, its PE ratio is 6.2, its PEG ratio is 1.62, its EPS is $6.70, and its return on capital is 5.5%. Our rating is 9 and we consider this stock as a moderate buy. Based on experienced analysts offering 12-month price targets for General Motors in the last 3 months, the average price target is $73.93, with a high estimate of $100 and a low estimate of $53. With current price at $41.51, this implies a 78.1% upside potential over the next year. The automotive industry has been as damaged as any by supply chain woes. In particular, chips required by General Motors and its peers are hard to come by. Last year that meant General Motors had to offer vehicles without certain features because of the chip shortage. This year the company isn't facing any downtime at its assembly plants due to shortages. That implies that General Motors should be able to handle increased manufacturing requirements and complex chips required for its EVs. The company has an objective to deliver 400,000 EVs in North America by 2024. That should result in higher valuations for General Motors stock. It depends on the company continuing to successfully navigate a complex supply chain environment. The above analysis is not exhaustive and just presents you some important insights. We suggest using this analysis and carry out your own detailed research before taking a decision to open any position. Next week, many companies are going to release their earnings reports, which is one of the most potentially volatile times of the year for equities, and if we are not careful enough, we could put our entire portfolio at risk. Companies may announce earnings or losses and stock prices may go up or down significantly. For this reason, we suggest that you avoid or carefully consider opening a position for the following stocks during next week, and wait to evaluate the earnings announcement before deciding to invest. Anglo Gold Ashanti, Vail Resorts, Coupa Software, and GitLab will release earnings on Monday 14th March. Tuesday 15th March will be the most popular day of the week as SentinelOne, Smartsheet, Core, and Main, and Dole among others will release their earnings on this day. Exelon Corporation, Lennar, Prudential, and Guess will release earnings on Wednesday 16th March. Accenture, FedEx Corporation and Aegon will release earnings on Thursday 17th March. Finally, Orla Mining and On Holding will release earnings on Friday 18th March. Watch these stocks' prices carefully and think twice before making any decision. Next week will not be that popular among dividend stocks, but we have some interesting options to suggest. Monday 14th March will be the most popular day of the week and is the ex-dividend date for New Market Corporation, Domino's Pizza, NXP Semiconductors, Merck & Company, The Coca-Cola Company, and Motorola Solutions. Tuesday 15th March is the ex-dividend date for Public Storage and Everest Re. Wednesday 16th March is the ex-dividend date for Waste Management, Taiwan Semiconductor Manufacturing Company, American International Group, Western Union, and Franco-Nevada Corporation. Thursday 17th March is the ex-dividend date for Icon Enterprises and Walmart. Finally, Friday 18th March is the ex-dividend date for Lamar Advertising and DTE Energy. Be sure to buy any of the above stocks before the market closing of the ex-dividends date previous day to benefit from the dividend payment. If you find this video useful, please like it, leave your comment below, share to a friend and subscribe to our channel. See you next time.